Hello, and welcome to Davies Wealth Management. Today's seminar is called Social Security. When should you start receiving retirement benefits? As you approach retirement, when to claim your Social Security retirement benefit is one of the biggest financial decisions you'll need to make. Should you begin receiving benefits at your full retirement age, which is 66 to 67, depending on the year you were born? Should you begin receiving a smaller monthly benefit before your full retirement age? That's as early as 62. Or should you wait past the full retirement age to receive a larger monthly benefit? You can delay receiving Social Security benefits up to the age of 70. As important as your decision is, there's no one-size-fits-all answer. It's a personal decision that must be made based on your unique circumstances. Of course, sometimes the answer is simple. You may have to take Social Security benefits as early as possible if you need Social Security income right away to meet day-to-day living expenses, perhaps because of illness, disability, or unemployment. But if that's not the case, if you have other sources of retirement income or you want to continue working, for example, you want to take the time to make an informed, well-reasoned decision about your Social Security benefits. I'd like to get started today with two major reasons why deciding when to take your Social Security benefits is important. First, when you take benefits can significantly affect your overall retirement income. With pensions disappearing, Social Security remains the major source of guaranteed lifetime retirement income for most Americans. Once you apply, your retirement benefit will be locked in for the remainder of your life. In most cases, not counting annual inflation adjustments or recalculations to account for additional work. So taking time to explore your options now can help you make sure you have enough retirement income later. The timing of benefits can also affect your spouse, because he or she may be entitled to receive spousal retirement benefits and survivor benefits based on the amount you receive. There's a lot to consider as you make these decisions, so here are some of the factors we'll be discussing today. Your full retirement age and how your benefit is calculated, the amount of your future retirement benefit and the effect of taking benefits early or late, how many years you expect to spend in retirement based on your life expectancy, whether you plan to continue working, your other retirement income sources, your income tax picture, how your decision will affect your spouse, and the benefits he or she can receive. So let's start with a couple of basic things you need to know as you begin to explore your options. The first is, what is your full retirement age? It's the age at which you can receive a full or unreduced Social Security retirement benefit. Your full retirement age ranges from 66 to 67. Depending on the year you were born, as shown in this chart. If you begin receiving benefits earlier than this age, you'll receive a reduced benefit. If you begin receiving benefits after this age, you'll receive a higher benefit because you will earn delayed retirement credits. Other benefits that you or your family members can receive are also based on what you're eligible to receive at your full retirement age. The second thing you'll want to understand is how your full retirement benefit is calculated. The benefit calculation is complicated and beyond the scope of this presentation, so I'm just going to give you a brief overview. Your Social Security retirement benefit is based on the number of years you've been working and your earnings over those years. To qualify for Social Security retirement benefits, you must have worked at least 10 years in Social Security covered employment. When you become eligible for benefits at age 62, the Social Security Administration calculates your full retirement benefit. Your highest 35 years of earnings are indexed to adjust for inflation, and they are averaged. Finally, a formula is applied to determine what's called your full retirement benefit. You may also hear full retirement benefit referred to as your basic benefit, or primary insurance amount. If you retire at a full retirement age, you will receive 100% of this amount. But if you begin receiving your retirement benefit earlier, your benefit will be reduced by a certain percentage for each month you receive benefits early. So let's take a closer look at how much you'll receive if you want to start taking benefits earlier than your full retirement age. Currently, the earliest age at which you can receive Social Security retirement benefits is age 62. But choosing to take benefits early has financial consequences because it will permanently reduce the amount you'll receive. Your benefit is reduced by a certain percentage for each month you receive benefits early. If your retirement age is 66, this equates to a 25% benefit reduction at age 62. If your full retirement age is 67, this equates to a 30% reduction. Here's an example. Let's say your full retirement age is 66, and you decide to apply for benefits at age 62. Your benefit will be 25% less than it would be at age 66. As this chart shows, an $1,800 monthly benefit taken at age 66 will be reduced by 25% to $1,350 if taken at age 62 instead. However, you will receive benefits for a longer period of time, 48 to 60 months longer, than if you began receiving benefits at your full retirement age, and this is certainly a big factor. We're going to discuss this soon, but first let's look at how your benefit will be affected if you decide to delay retirement instead. If you delay receiving Social Security benefits, you'll receive delayed retirement credits that will permanently increase your benefit. Your benefit will increase for each month you delay receiving benefits, or 8% per year, past your full retirement age up until age 70. Note that we're only talking about benefits based on your own earnings record. You won't receive delayed retirement credits for survivor's benefits or spousal benefits. To continue with the example from the previous slide, if your full retirement age is 66 and you decide to delay receiving benefits until age 70, your benefit at age 70 will be 32% more than at age 66. As this chart shows, for each year you delay, an $1,800 monthly benefit taken at age 66 will increase by $144 a month and will be worth $2,376 if taken at age 70 instead of age 66. This final chart shows the range of monthly benefits you might receive. If your full retirement benefit at age 66 is $1,800, depending on when you choose to begin taking benefits, in our hypothetical example, if $1,800 is the full retirement benefit at age 66, the monthly benefit of $2,376 at age 70 is 76% more than the monthly benefit of $1,350 taken at age 62. That's a big increase. However, what this chart doesn't show is that you'll receive benefits for 8 years longer if you take them beginning at age 62 rather than age 70, and that can add up to a lot of money. In this example, if you receive a $1,350 benefit for 8 years, you would have received $129,600 by the age of 70, not including the cost of living adjustments. So we return to the fundamental question. Is it better to opt for a smaller monthly benefit at age 62, but receive it for a longer period of time? Or is it better to take it at age 70 to receive the highest monthly benefit possible? Again, there's no one size that fits all. In part, it depends on how long you can afford to delay receiving benefits and how long you expect retirement to last. How long will retirement last? There's no way to know for sure, but retirement may last longer than you think. According to recent national vital statistics report data, on average, a man who reaches the age of 65 today can expect to live until approximately age 83, while a woman who reaches age 65 can expect to live until approximately age 85. And according to the Social Security Administration, about 1 of every 4 retirees will live past the age of 90, with 1 out of every 10 living past the age of 95. So you may even want to plan for this maximum lifespan to reduce the risk that you'll live longer than you expect and simply run out of money. For example, if you wait a few years to take benefits, you'll receive a higher monthly benefit for life. And remember, because you'll receive annual cost of living adjustments, otherwise known as COLA, if prices rise. Your benefit will keep pace with inflation, unlike most other sources of retirement income. If you're married, we need to consider the joint life expectancies of you and your spouse, which will often differ from your individual life expectancies. If you're thinking about working well into your 60s and 70s to increase your retirement savings, you may be wondering whether you can receive your Social Security benefits while you continue to work. The answer is yes. Many people choose to apply for Social Security benefits before they actually retire. But as you may have heard, earnings from your work may affect your Social Security benefit if you're under the full retirement age. If you're under the full retirement age and your earnings exceed a certain amount, called the annual earnings limit, part of your benefit will be withheld, reducing the amount you receive from Social Security. But once you reach full retirement age, you can work and collect full Social Security benefits. Earning from a job won't affect your benefit at all. If you're under the full retirement age, the rule is that $1 in benefits will be withheld for every $2 you earn over the annual earnings limit. This limit generally changes every year. In 2014, the limit is $15,480. In the year you reach full retirement age, a special rule applies. $1 in benefits will be withheld for every $3 you earn over the annual earnings limit. In 2014, this limit was $41,400. As mentioned earlier, at or after full retirement age, earnings will not affect your benefit. However, I want to clear up a misconception. You're not actually losing your benefits because you choose to work, so you don't need to try to limit your earnings. If some of your benefits are withheld, you'll receive a higher monthly benefit at full retirement age, because the Social Security Administration will recalculate your benefit every year and give you a credit for any of those earnings that are withheld. So the effect working will have on your benefits is only temporary, and any additional earnings you have may actually increase your benefit later. The Social Security Administration website has a calculator called a Retirement Earnings Test Calculator that you can use to see how earnings before retirement age might affect your benefit. One of the most important factors to consider as you decide when to begin taking Social Security benefits is how your decision will affect your overall retirement income plan. Most people have several sources of retirement income, including Social Security benefits, earnings from a job, pension benefits, and income from savings and investments. How much retirement income do you need, and how does your Social Security fit into that plan? If you have less than adequate retirement savings or no pension, you may need to rely more heavily on your Social Security income, leading you to take benefits early if you need retirement income as soon as possible. Or conversely, encourage you to postpone taking benefits so that you can earn the highest benefit possible. If you have been able to accumulate substantial retirement assets, you may have more flexibility when it comes to timing your Social Security benefits. For example, it's possible that taking your Social Security benefits sooner rather than later will allow you to delay withdrawing funds from tax-advantaged investments such as 401k plans, 403b plans, or traditional IRAs, allowing them to accumulate tax-deferred a bit longer. Alternatively, tapping other retirement assets first may allow you to postpone claiming Social Security benefits, thereby allowing you to accrue delayed retirement credits. Taxes may also be a consideration. Depending on what income you have in addition to your Social Security benefit, now taxes aren't going to be a big concern for everyone. If you have little or no income other than Social Security, then your Social Security income generally won't be taxable. However, if you have income from sources other than Social Security, you may end up having to pay federal income taxes on your benefits, as shown on the chart. 50% to 85% of your Social Security benefit may be taxable, depending on your combined income from Social Security and other sources and your taxing filing status. For example, let's say you're a single and you collect a Social Security benefit of $20,000 a year and have $35,000 in earnings from a job. Up to 85% of your benefit may be taxable because your adjusted gross income plus 1/2 of your Social Security income is greater than $34,000 a year. The important point to remember is that when you're making your decision about when to begin receiving your Social Security benefits, federal and in some cases state income taxes may be a consideration if you have substantial taxable income such as earned income, taxable pension income, or investment income. If you're married, there's another important question you'll need to ask before you decide when to begin taking benefits. How will my decision affect my spouse? That's because when you begin taking a retirement benefit can dramatically affect your spouse's benefit during retirement, and thus your household income. Your decision can also affect any survivor's benefits your spouse may be entitled to, and your spouse has decisions to make too. Together, you'll need to consider what the most appropriate combination of claiming ages is, based on your ages, earning, and life expectancies. I want to point out here too that other people such as your dependent child or former spouse may also be eligible for benefits based on your earnings record, but the rules are a bit different, so we're not going to cover them in this presentation. When you're married and both you and your spouse have worked in jobs covered by Social Security, each of you may be entitled to retirement benefits based on your own earnings record. As you recall, at your full retirement age, you're entitled to 100% of your full retirement benefit, and you can receive your reduced benefits as early as age 62. You or your spouse may also be entitled to spousal benefits. For example, if your spouse has had low lifetime earnings, he or she may be entitled to a spousal benefit based on your earnings record that is larger than a retirement benefit based on his or her own earnings record. At your spouse's full retirement age, the spousal benefit will generally equal 50% of your full retirement benefit. However, that amount will be reduced if your spouse files early. For example, if your spouse's full retirement age is 66 and he or she files at age 62, your spouse will receive only 35% of your full retirement benefit amount. This reduction is permanent, so it's important to carefully consider the implications of filing early. And keep in mind that your spouse can't collect spousal benefits until you have filed for your retirement benefit. In addition to retirement benefits and spousal benefits, married couples must consider survivor's benefits. When you take your Social Security benefit, can greatly affect the amount of income available to your spouse should you die, because your surviving spouse will generally receive the benefit that you were receiving at the time of your death, unless your spouse is already receiving a higher benefit based on his or her own earnings record. If your spouse's life expectancy is much longer than yours, this can be an especially important consideration. Survivor's benefits may be payable as early as age 60. However, a benefit reduction will apply if the surviving spouse begins collecting a survivor's benefit between age 60 and his or her own full retirement age. Before you decide to claim spousal or retirement benefits, you might want to consider a couple of strategies that you can potentially use to maximize both your retirement income and income for the surviving spouse. One of these strategies, called File-and-Suspend, may be especially useful when one spouse has substantially lower earnings than the other. As you recall, your spouse may be able to receive a spousal benefit based on your earnings record if it's more than his or her own retirement benefit. But there's a catch. Ordinarily, your spouse can't receive a spousal benefit until you've filed for your own retirement benefit. Fortunately, there's a workaround for this under Social Security rules. At full retirement age, you can apply for Social Security benefits, then request to have your benefit payment suspended. This allows your eligible spouse to begin collecting spousal benefits. You can then accrue delayed retirement credits up until age 70 in order to receive a higher retirement benefit later when you reinstate your retirement benefit application. This strategy not only allows for potential greater income in retirement, but also builds up the survivor's benefit. Should the higher earning spouse die first, Remember, upon the death of a spouse, the surviving spouse is entitled to receive the greater of his or her own benefit, or the benefit the deceased spouse was receiving. It's a little complicated, so let's look at a hypothetical example of how file and suspend might work. Our fictional couple, Tony and Carla, are both 66 years old, their full retirement ages. Carla wants to retire and begin receiving benefits, but because she's had low lifetime earnings, she'll qualify for a higher spousal benefit based on Tony's earnings record. The problem is that he's not ready to retire yet, and he doesn't want to begin receiving benefits until age 70 because he wants to get the maximum benefit. But under Social Security rules, Carla can't receive spousal benefits until Tony files for benefits. The solution? Tony files an application for benefits, then suspends it, allowing Carla to begin collecting spousal benefits. Then at age 70, Tony claims his benefit, which is now 32% higher than it would have been at his full retirement age. This boosts survivor income for Carla, too, if Tony were to die, because she would be entitled to receive the amount he was receiving at the time of his death, giving her substantially more survivor income. The next strategy may be useful for spouses who have both worked and have earned a Social Security retirement benefit. If certain requirements are met, you can, at or after full retirement age, choose which benefit you want to receive first, your own retirement benefit or a spousal benefit, based on your spouse's earnings record. This is done by filling a restricted application. Here's an example. One spouse, let's call her Diane, files for retirement benefits based on her own earnings record. Then, at or after this full retirement age, the other spouse, let's call him Mike, files a restricted application for spousal benefits only based on Diane's record. Then later, at age 70, Mike switches over to his own benefit, which is now much larger than it would have been at a full retirement age, due to delayed retirement credits. Again, this option is only available at full retirement age or later, and only if your spouse has already filed for retirement benefits based on his or her own earnings record. The file and suspend strategy and the restricted application strategy aren't right for everyone, and there are other factors to consider such as age differences, benefit differences, life expectancy, and income taxes that might affect the outcome. And of course, you'll need to have enough income from other sources if you want to delay receiving Social Security. Today we looked at some of the major questions that you'll need to consider as you decide when to begin receiving Social Security benefits. To recap, here are some of the reasons you may decide to take benefits earlier, as well as some of the reasons why you might decide to take benefits later. Remember, the choice really is yours. It's up to you, based on your unique needs and circumstances. As a starting point, if you haven't already done so, I urge you to go to the Social Security website, where you have a couple of relatively easy ways to estimate what retirement benefits you might receive. First, you can sign up to access your Social Security statement online, so that you can view your actual earnings record and what you can expect to receive under current law if you apply at age 62. At full retirement age and at age 70. If you're already age 60, you also have the option of receiving this statement in the mail every year, about 3 months before your birthday. The second way to estimate your Social Security benefit is to use the SSA's Retirement Estimator, which is also available on the Social Security Administration website. This calculator allows you to input various scenarios based on current law to estimate your future benefits. And as you near age 62, you should also contact the Social Security Administration to discuss your options. Representatives are not allowed to give you advice about when to start your benefits, but they will be happy to explain your options and the rules that apply. When it comes to apply for Social Security benefits, you can do that online, by phone, or in person. Retirement can be an exciting time, but it comes with financial challenges. When you're ready to make decisions about your Social Security benefits, I hope you'll take the time to explore your options. Thank you for your time. I would welcome the opportunity to meet individually with you to address any specific concerns or questions that you may have. You can visit us on the web at www.tdwealth.net or go ahead and give us a call, 954-353-6198.